Zoom has been, like a year and a half ago, very few people knew about it. Now everyone knows what Zoom is, especially with the pandemic. And the company reported much stronger than expected earnings, and they issued very strong guidance as well. So their revenue was at $882 million versus an expected $811 million. They were about 9 to 10% higher than what was expected. Revenue grew almost 370% year over year, which makes sense. Last year this time, people were just starting to go into lockdown for the pandemic, so makes sense. And they also increased their gross margin. One thing that was surprising, though, with their earnings call was that the company lost fewer customers than expected. Once things start opening up, the company was expecting to have a very high churn rate, lose a lot of customers because people could travel more rather than always do online conference calls. People could do a lot of this stuff in person. So even though things aren't completely open, there are, they're not nearly as many restrictions as before, but they said either way, a lot more customers are continuing to use their platform than they had expected. They said right now they have 467,100 customers with more than 10 employees. So they have a lot of businesses on their platform. That is a portion of their business that has grown over 470% year over year. And they said that with all of this cash on hand, they're doing much better than expected. They have, projecting pretty high rates of growth for next year, even though things are going to be opening up. They don't think people are going to be going traveling still as much in person. They said with all this extra capital, they are open to buying new companies, some acquisitions. They said they haven't found the right fit yet, but they are on the lookout. So it's exciting to see that. Zoom stock has done extremely well over the last year and a half. It's going to continue to do well, I think, and they are expecting at least another, for the next year, 42% year-over-year revenue growth, which is still pretty big.